Hi, this is Paul Rangeley from singleinvoicefinance.com. In this era in which it seems bankers just don't like to take risks, it's very hard for small businesses, particularly startups, to get finance. But there are some things you can do to make it a little bit easier. My first tip is to get your financial house in order. In other words, make sure all your documentation is good to go before you even knock on the banker's door. In other words, you need a profit and loss statement, a balance sheet for the past 3 years. Most lenders would like to see and like to lend to a business that's been profitable for at least 3 years. Some will look at 2 years, but you need that information there for them straight away and in some order that is easy to examine. Tax is very important. If you're not behind in your tax, that helps. And if you are behind in your tax, make sure you've got an instalment plan in place with the ATO so the bank can see that you're trying to pay your tax. The third most important thing is your credit history. The first thing a bank will do when you make an application is go and check your credit history, and if there's a blemish, then it's highly unlikely that you will get a loan of any kind. So you need to go and check your own credit file, and if there's a problem there, try and get it removed. My second tip is tell your business's story. Explain to the bank clearly why you need the money, what sort of industry you're in, what's happening in that industry at this time, what the future holds for that industry. Build up a picture so that the person who's hearing your application or who is going to examine your application clearly understands why you need the money, what you're going to use it for, and what benefit you and the lender will get from giving you the money. My third tip is shop around. Sometimes you can go to the bank you've dealt with all your life. It might be the Commonwealth, might be the NAB, but they may decide that they're already exposed enough to you and decline you. They're not going to tell you that someone else may lend to you, so you do need to find a good finance broker or advisor who understands what's available in the market. And often you'll find a non-bank lender, a private lender, who can lend you funds on a short-term basis or a longer-term basis at fairly reasonable rates. My fourth tip is look at alternative funding for short-term needs. In other words, if you only need the money for a month or two, don't go to the bank and go through all the rigmarole you have to go through to get a loan from them. Explore asset-based lending such as invoice finance. That's often a good short-term measure to get funds into your business, but it can also act as a bridge. So you need money now, but you know the bank's not going to lend you any money for a couple of months while it goes through its due diligence process. You can use invoice finance as a bridge to get you from now till then.